If you've not been profitable in the last 3 months, I'm about to share with you some price action concepts that's going to help you to understand the intention in the market. That means that you're going to be getting into the correct trades, which means you're going to be catching a lot more winning trades. And the key to consistent profitability is catching those winning trades and minimizing your drawdowns. So let's get into today's video. Trading is all in the details, so when you're creating a strategy, you need to have two things in mind. First of all, price action concepts and processes, and then second is your strategy rules. So let's start with number one. There's two concepts that I'm going to teach you today that we use to read price action. We create processes based on price action first. It's so important to read the price action, make decisions on the price action, and then apply your strategy onto that price action. So first of all is the how do we break concept. Now, all we need to do to understand how do we break is identify highs and lows within the market. These are your swing points within the market that we can see here. I'm going to mark all of these out. And every time price runs above these or below these, we're going to be understanding what price has done next. This is the how do we break concept. So we start by just understanding every high and every low that's on the charts that we can see right now. This gives us our overall framework and our understanding. This also gives us our current high and our current low within the market as well. So we can understand what price might want to do next, and also previous highs and previous lows in the market. So we can also understand what current price wants to do next, or what it's likely to do next. We're never going to get 100%, but we can put ourselves on the side of probability over time. So I'm going to show you these concepts first, and then I'm going to show you how I use them in my trading to make decisions, when to get into the market versus when to stay out of the market. This is just two of the concepts that you can learn inside our price action course as well, Trade and Missing Pieces. There are many other concepts that we also use to build our trade ideas and to help us make consistent decisions in the market, but this is just one of them. So essentially what we want to do is understand how price is running above these highs and below the previous lows. A lot of traders will look at these areas and they'll just say, well, these are just breaks of structure. Well, we take that one step further and say, well, how do we break that structure? Because what price does next is actually going to determine the decisions that we're going to make for our strategy when we get into the market versus when we stay out of the market. So of course, we only want to trade with the trend. So once we've identified a trending market here and we've broken a previous low, here, the next question I always ask myself is, how do we break through this low? Because if we start breaking through highs and lows and we start getting rejections, for example, over here, we run above this previous high that we had in the market, and we could see we got a strong rejection once, strong rejection twice. This tells us that price doesn't want to continue in this direction, which actually gives us our direction to trade in the future. And of course, when we look over to the left, what can we also see? We can also see a previous sideways market here, which has given us our range initiation, mitigation, continuation phase here within the market. That's another one of our concepts that we use, the RAMC model, to understand direction. But once we understand our area on the charts that we're looking to trade from, our previous sideways range here in the market, what we want to do is read the price action moving into this location. Like I said, running above highs and not extending shows that price doesn't want to continue in this direction any further. And because this happens from our previous sideways range here in the market, this gives us an understanding of which direction we're trading. So what concepts do is they'll stack confluences in your favor and give you an edge over the markets. So RAMC, range, initiation, mitigation, continuation, gives us overall a direction in the market. It gives us an edge on the direction. Running above highs and not extending also gives us an edge to say price doesn't want to continue bullish, so we're going to continue bearish. Again, we're stacking on the confluences here now for continuations to the downside. Then I apply on my entry strategy, which is seeing a high and a higher high in the session followed by an entry candle. So if you can't read that, I'll put that on now. We got this high that we have here, and of course this higher high. What that shows us is a fractal price delivery, and a fractal price delivery in price is a high and a higher high, which essentially sets up a buy to sell order. Price creating a high first, running above that high, is showing buy to then sell orders happening within the market. This is how the banks have to move price. They buy all their positions here into the liquidity so that they can transact their large orders in the market through volume of buy to sell orders, and then they initiate price in the opposite direction. That creates a buy to sell order within the market, which also creates the next area in the future that price can react out from to see a continuation there to the downside. We can see that this whole buy to sell was reacted from instantly, and then we saw continuation there to the downside. We can also see buy to sell. This is being left for a future intention. So when price gets back up into here, we are going to see a reaction. But if the intention continues, then we're going to see a continuation there to the downside. But this is not an entry that I would look for, and we'll go through that in a second. So that's the first concept to understand when I want to get into the market. Now, what about how we can use how do we break to stay out of the market? Well, let's go back to a previous trade that I took recently, and you can understand how I can use the how do we break concept to stay out of the market. So here we can see that we have a trending market. We have an A to B, we pulled back and saw continuation there to the downside. So this was the previous low that we had here within the market. Now, when price broke below this low, I'm asking myself, how did we break? Did we break through and extend through this low? And what that shows me is that price wants to trend. For example, if we get a trending market and we break through a low and we extend through that low, that's telling us that price wants to trend. So we'll be looking for a pullback continuation of that intention. If we break below this low and we start to get rejections, that's showing price slowing down. So we only want to play the opposite direction here within the market. Now, like I said, when this happens from a previous sideways range in the market and we have that bullish intention coming into the market, this is us reading price, saying price doesn't want to continue lower anymore. And because this is happening from our previous sideways range here, followed by initiation, and we're into the point of mitigation, and we know that the next phase of price is the continuation phase to target that high following the RAMC model, reading this price action before we even execute our strategy is really, really important. And that's why the how do we break concept is so important when it comes to executing trades within the market. So that's how we utilize it to get involved in overall the direction of the market. Now, this is how we utilize it when we're in a trend. Now, because we've broken through and we extended, like I said, what does that mean for us? It means that price wants to continue trending in that direction. So this is really important because when it comes to actually entering the market, if we look left here where price has reacted from, we can see that price has reacted from this previous sideways range here within the market. Price was contained between this high and this low before we broke out here to the upside. So this is overall our sideways ranging price action. Again, we can just wait for price to get here in the future, see a reaction, then we can look left and draw on our sideways range in the market. That's because there's so many ranges in the market here that instead of trying to predict where price is going to react, we can just wait for price to react there in the future, and then we can go back and draw it on. That helps us to stop being a predictor in the market and just react to what the price is showing us. So in current price here, we can see that during my session, this is a buy order that's come into the market. Remember, in current price, I'm looking for a low and a lower low to be printed, and then I'm looking for my entry. So typically in the session, this is exactly where I'll be looking for my buy setup. Now, the reason that I didn't take this buy and instead I took the sell is because of the how do we break concept. This is so important to read this price action first and see that we extended through that low. And because we extended through the low, price is showing it wants to trend. So for me to look for a buy opportunity doesn't make sense because price is telling me, based on the concepts, that we want to pull back and see a continuation of that momentum. So even though there's a buy order here in the market that I can look to get involved in during my session, I'm going to sit out of that and wait to see if I get that sell order within the market, which we do here. We get the high here, followed by the higher high, and then I get my entry candle here to the downside, and this is the one that I took for the continuation there to the downside. So this is the difference between reading price action first and having price action concepts that you trade that help me to make decisions on whether I'm going to stay out of the market, whether I'm going to be looking for a buy, or whether I'm going to be looking for a sell. Like I said, that is just one concept that we use. There are many concepts that we use that we can stack together to build confluences, but this is one of the main concepts that we use. How do we break through this high, or how do we break through this low? That helps us to give an understanding on what we want to do next. And like I said, this becomes a repeatable process in how you trade price action now, because if price extends through this low, what does that mean? That we want to trend, so we only want to look for continuations in that direction. If we run above a high or below a low and we don't extend, then we don't want to be looking for continuations in that direction here to the upside, we want to be looking to only trade in the opposite direction. You see how this becomes a repeatable process in how you trade price action, and that's how you're able to trade your strategy in a consistent way and over time make better decisions to get into the market versus staying out of the market. So that is the first concept that we use. Now we're going to go into the second concept, which is all about market structure. And of course, everyone trades market structure. So this is going to be my view on how I look for market structure and how I see it as extremely important when we're building our high probability trading ideas in the market. So first of all, we just need to go back to a higher time frame. Let's start on the daily chart. And what we want to understand on the daily chart is where price is reacting from right now. That's how we're able to build our trade ideas and how we're able to trade in the overall direction every single week in the markets as well. We don't have to wait for price to come back down into these areas and react and then trade them. We can always trade current price. And this is why we only watch one pair as well, because we're able to trade the current price action with our processes. So that all starts with understanding the market structure, and that also starts by understanding where price is currently reacting from. So if we zoom out and we look left, what can we also see? We can see that prices created this sideways range here, sideways price action, before we broke out here to the downside. Now, this has happened in 2021, but this is very relevant to today when we start to think about price action concepts. Range and initiation is an incomplete bearish order flow pattern. So when price pulls back up into this location in the future and sees a reaction, we've now mitigated all of the buy to sell orders that were inside this range, and now we can trade alongside that intention again to the downside. So until we come back into that point of mitigation and see a continuation, this is then an incomplete pattern when we only see range and initiation. So we see a sideways range and initiation here to the downside, and this is on the red line, so we know that price has reacted from here in the future. So let's just draw that on now, and I'm just going to go all the way to current price action that we see here. Now that gives us an understanding of which direction that we're trading in. Because overall we're at a sell range, we're only going to be looking for sell continuations to the downside. And this is one of my key processes in how I trade direction within the market. What I want to see from these points of mitigation on the 15-minute chart is continuation structure. Now, a lot of people look at continuation structure as just any highs and lows within the market. There are three main types of continuation structure. There's very aggressive continuation structure. There's also a nice trend, which is what everyone wants to see within the market. And then we also have those more complex continuation structures where price runs highs and then we see continuations to the downside. This, most of the time, is where people get caught out. But with my process of understanding higher time frame mitigations and only looking for sells, you're never going to be looking for buys when price takes out previous highs. Here, where most people will look for their buy continuations, because you're trading alongside the higher time frame intention within the market, which is to see lower prices. So now when we see these continuation structures happening within the market and we see runs above highs, what we want to do is utilize our how do we break concept. How do we break above the high? If we broke above and we didn't extend, that shows that price doesn't want to continue in that direction, and then we see bearish continuation, which means we're only going to be looking to take selling opportunities here within the market. So instead of seeing that as the break of structure here and looking for your pullback continuation, we just see that as manipulation to then see continuations there to the downside, and this actually sets up really nice continuations here on the minute chart and the 15-minute chart that we can get involved in during our session. So when we think about the structure that's happening, so these are the three structures that I look for at these previous mitigations, and as well we can also see how did price break above this high. We run above the high and we didn't extend, so now we know that we're only playing the new direction within the market. See how these concepts can start to stack together to give us an understanding of what to do next within the market. So now back down to the 15-minute chart here, and what can we see? We can see the different types of price deliveries and continuation structures that we get in the market. We can see that we get that trending market here to the downside, where we get those nice swings that happen here within the market. Then we break here to the upside. We run above the high. How do we break? No extension. Of course, this happens on Friday, so we just end up continuing here to the downside. And then we start to break structures here to the upside, and we start to run above previous highs. Now, because we're at our sell range within the market, we want to be seeing how price is running above these highs, because this is going to give us an understanding of whether price wants to see bullish continuation and run above this high, and then maybe we get our continuations back to the downside, or we start running above these highs, not extending, and then we want to be playing our new directions here within the market during our sessions. And this is what sets up those continuation trades within the market for us during our sessions, because we're utilizing the price action concepts of reading structure A to B here, pullback, continuation. We're utilizing the RAMC concept as well, range, initiation, mitigation, continuation. We're utilizing how would a price break above the high, no extension, so we know that price wants to move to the downside. And all this is happening inside our higher time frame sell range, where we know that we're overall looking for selling direction here within the market. So look how much is stacked in our favor, just utilizing a few of our concepts that we use inside NJAT to read price action first and then make decisions on the price action. So this was a great sell here at the end of the session. Again, utilizing the same processes. You can see that obviously this has run a lot of profit here, but for me, I only look for 1 to 4 risk to rewards. And this next day, I know so many of our traders caught this on the 15-minute chart here for a continuation there to the downside after the news happened and was able to bank 4% profit. I know Caesar caught that trade. I'm going to put that on the screen right now. He's someone that I mentor personally in my Diamond program. If you don't know what the Diamond program is, it's anyone that has come through NJAT in the community and they've decided whether they want to trade the 1-minute strategy, which is Chuck's strategy, or the 15-minute strategy, which is my strategy. And we mentor them for free to consistent profitability using our systems. We'll do that for any trader that puts in the time and the effort into learning our concepts and learning the strategy, because we're training all of these traders to eventually trade a very large fund. So there's a bigger goal in mind while we are training these traders. But I train around 10 traders that all trade the 15-minute chart. We're all getting involved in the same moves. And Chucks does exactly the same on the 1-minute chart as well. It's around 10 traders that he does calls with every week, teaching his exact process. And I do exactly the same. We teach our exact process. We run through all of the trades that we've been through in the last couple of weeks, and we all remain aligned in the markets as well. But if you want the opportunity to work with us for free, you need to enroll at notjustatrade.com. Go through our price action course, which will teach you all of these concepts that we went through and more in today's video. You'll also learn my 15-minute strategy or Chuck's 1-minute strategy, depending on which one you prefer. And then once you've put in the time and effort, we will work with you completely free and we will make you a consistently profitable trader. This is the reason why we have 25 consistently profitable traders here, which is the highest volume in the industry. It's because we work with you one-to-one, because like I said, we are training you to trade a large fund in the future. So make sure you visit notjustatrade.com and enroll if you want to get access. We also have our 10% discount in the description of this video as well, so no reason not to. Make sure you leave a like and comment on this video if you enjoyed it, and we'll catch you guys on the next one. Just before you go, here is a clip of all of the winning trades that we hit this week inside the NJAT community. We had another student also receive his FTMO payout of over £20,000. We also have our brand new goal setting course video that is out now, and a brand new price action course video that is going to be out next week. We said last year that we are going to create the best trading mentorship in 2025. And these are all of the steps that we're taking to ensure that every single trader in our community is getting the correct support and has the absolute best opportunity to make profits and become successful in 2025. We are updating all of our knowledge. We've created a roadmap for you as well with 3 to 6 months worth of step-by-step instructions so that you can guarantee your success. We've increased the amount of webinars that we're doing so we can stay more connected to you guys and give you a lot more on-hand support. And of course, we're there every single session and available for you guys so you can ask any in-the-moment questions and get instant access to those burning desired questions, where in other communities, it's going to take weeks and weeks for you to get the answers, where you're going to get them instantly with us. So if you want to find out more, visit our website at notjustatrade.com. If you did enjoy this video and it did help you out, make sure you leave us a comment down in the comment section. Make sure you like the video, and we'll catch you guys on the next one.